Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market update for Thursday. Can you believe it? The 19th of July. Well, the question we have on our blog today is, what's important for America? Is it Romney's tax returns or a stronger economy? I'd like to have your opinion on that. It's not political. We just want to know what's important to you as a resident or an American here in the United States, or even outside the United States. We'd like to hear from you. So that's the question we posted in our blog. If you've not voted, or you may wish to vote or leave a comment, we'd love to hear from you. So give it a shot. But we're starting off in the markets. The markets are gained strong. You can see based on our indexes right here, they're basically all strong, with the exception obviously of the USD, which is a little bit under pressure, but pretty much flat for the day. But the question is, are these markets right here, the Dow, the Nasdaq, and the S&P, are they going to hold their gains? I don't think so. I think something's going to happen. Something to watch very carefully is if we close lower in these markets today. That's something to really pay attention to. So let's go to our first market, and we'll go to our portfolio manager. And the portfolio manager is right here. We're going to start with actually a little bit different. We're going to start with the we start with normally with the S&P 500. We could start with that, but I want to look at the Dow today. So let's start with that, and you can see basically where we are. So here's the Dow, and we've got a 1 month chart. Let's put a 6 month chart on, so you can see basically this pattern we've talked about yesterday, and again we'll talk about today. So if we see this market close lower for the day, now that would be, let's see, we're below 12,900. I say that would be something to look at. We closed yesterday at 12,908. I would say if we close below 12,900, that would be very similar to this pattern here and also this pattern here. So I think if we get that, we could see this market on the defensive for the next 6 days. We are obviously extended. If we turn down here, a little bit of a bearish divergence, not very much, but a little bit. But let's see how that plays out. So let's go to our next market, and that's the euro. Now the euro is kind of like the gift that keeps on giving, because you're down today in the euro. This is the pattern I'm seeing in the euro. Let me just get this. Actually, it's probably illustrated best on this type of chart. So let's just get my illustrator on here. So it looks to me like you've had a pretty sharp down move, like right here, and this move here is just sort of like this, kind of like a little flag. And normally these things are resolved on the downside. If we're correct, we're looking for the market to go, the euro to trade down to the 120 to 117 area. So let's see how that works out. But generally speaking, the trend is still very clearly down, with the monthly and the weekly cleared in a negative trend. Only the daily, which is right here, is in a minor uptrend. And we don't pay a lot of attention to that. It's not the most important driver of trends. So here's the score, minus 85, still in a downtrend. So let's see how that plays out. Let's go to our next market, and let's take a quick look at the S&P 500. It's a plus 70, so it's kind of like stuck in the range. It can't get on the upside, can't go on the downside. But here's the chart we're looking at, and as you know, we pointed this out yesterday. We're looking at these highs like this, and it seems to be every 10 or 11 days you get a high in this market, and I think that's where we are right now. We're also, if you look, we just made slightly new highs here, and we're just literally kind of flat to turning down on this level here. So maybe a reach, but nonetheless, this would be a very, very important day to watch, because I think if we see this market close below yesterday's highs, or the close yesterday, and that would be, we closed yesterday right here at 1372. So I would say a close below 1372, 1370 to be more precise. I think that would have a negative connotations, much like we saw here. We went down about 6 or 7 days, and here we went down about 6 days. So I would not be surprised to see this market come back down based on, one, being outside the Donchian trade channel, and also on a cyclic high period, and the fact that we're overbought. So let's see how that plays out. Let's go back to our markets, and let's take a look at crude oil. Crude oil has been very strong. It's very strong today, trading up 92.12. And what we put in here earlier was we thought this is going to be a base, but we weren't so sure. Our long-term monthly is negative. Our intermediate was long from 86.91, so that's doing well. So the intermediate term trend is up. And if we put our Fibonacci retracement levels in, you can see, we mentioned this in our comments today, we could see this market, well, 92.22 is a 50% retracement, and 95.74 is a 61.8% retracement. So we could see potentially there, but maybe a better gauge of this would be a move and look at just the type of formation we're seeing. This is a base, and let me get my illustrator. So you can see basically across here, around there, we broke out. So you can measure from the lows here, and I think the lows are right around the 78 level to about this level here, and I'm going to call that 83. So 5 to there, 78 to 87 rather. What is that, 9 points? So we can go 9 points to the 87 level, and what does that take us up to? 96. So 96 also, that pulls you right into that Fibonacci retracement level, which I think we said was 95.74. So I think that is not out of the question to see that level hit. And of course, this is not going to be good for the economy, and it could be one of the things that's going to people will be talking about in the days to come, saying it's going to put the kibosh on the economy. We'll have to see how that plays out. But nonetheless, the intermediate term trend is up, the daily's up, only the negative longer term is down, and I think that's what's going to be important to see if this turns up. Not sure it's going to do that just right now. So let's clear the screen, go to our next market. In the next market we're going to be looking at is we looked at the euro. Let's take a look at the Nasdaq, because that's kind of an interesting pattern. All the equity markets are pretty much the same, but these are what I'm watching today, is if we see the market close lower than yesterday's close, and that is 2,942. If you close with 2,966, so it's quite a ways away. It may not happen, but that's what would be an ideal cyclic pattern. Not so much on this market, but more on the other two markets we mentioned, the Dow and the S&P 500. So let's go to our next market, and that's gold. Gold is actually up $8, about 0.5%, and that's one thing I looked at gold today, and I want to share this with you because I thought it was a very interesting pattern. Now let me just put the close only here, and let's just smooth this out a little bit. And let's take some of these studies off to make it very, very clean. So one thing I looked at in gold, and this is the pattern I was looking at. So I was taking my trend lines. So I had a trend line, and you remember the little yellow box goes here. So I was drawing from this level here. You can see clearly you've got those 3 points. We talked about 1, 2, 3. And on the downside, you've got pretty much the same thing. You've got those 1, 2, 3, 4 points. So here's what we're looking at. This formation is basically what I would call a coil. Okay, so what it is, the market's inside this coil, and eventually it's going to break out either on the upside or the downside. Now the question is, why do I say the upside and the downside? Well, you don't really know, but the reality is normally this formation is a continuation pattern. So with the trend being down, theoretically this should break down to the downside. Plus you've got your monthly, weekly, and daily all negative, indicating that this market is really in a downward trend. So I would suspect that the trend is going to be down, and I would say the levels you want to look at in gold should be right around the 1570 to 1566. If you see a close below that level, which is right around here, then I think you're on your way to make this market actually go quite a bit low, which I think would surprise a lot of people in the bullish camp, who have been very disappointed, I have to say, with the gold in the last year or so. So let's clear the screen, go to our next market. So remember that coil formation. So let's go to our portfolio, see what else. But let's take a look at copper. And copper is up today about 1.5%. It's actually performing better than gold. And partly the reason it's been up is because of what's going on in the general stock market, thinking things are getting better, but I don't think that's really a realistic approach to look at. Nonetheless, you're still in this sort of formation of trap between, let's say, let me just draw this in. You're trapped between these levels right here on the upside, right around the 355 level, and you sort of, I would say, short term, right around the 340. So without going into too much of a gig on this, I would say that's where we are right now in the marketplace. You've got the monthly down, weekly up, 70, trying to emerge into a bull market, but it's not there yet. So let's clear the screen, go to our next market. And we're looking at silver. Silver is much like gold, except it's a little bit more. I mean, look at the silver market. You've been really, since about June 24th, you've gone nowhere. And 28 on the upside, about 27 on the downside. And there again, if we see silver close below 26.80 or 26.70, that would be a negative signal in our opinion. So let's see how that plays out. But look at the charts, just nothing, 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 nothing. So it's really beginning to get a lack of interest, and we need something to kick this market off. I'm not sure what it's going to be, but it may just erode on its own course. Remember this market here? We had similar patterns back there, like boom, 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 down. So again, just because the market's doing this doesn't mean to say it's getting ready to go higher. It could actually be ready to go lower. So let's go to our next market. We've got a lot of markets to cover today. We're going to be looking at the grains, which are red hot, and we're also going to be looking at the bank stocks, which are also very, very interesting. Now, this is the CRB index, and this has really performed extremely well, partly because of the corn, wheat, and soybeans, which have been red hot, and crude oil, which has also moved from 78 up to where it's presently trading about $92 a barrel, which is a big move. And you can see this being reflected in the CRB index. Now, we're still plus 70, so the longer-term trend in our way of looking at things is still negative. However, the resistance would come in right around this level here, right around the May 1st highs, around 308. 308 to 310, I think, would be a resistance for this market. So let's see how it plays out, but nonetheless, it's really spiked up today. Whether it maintains this position, let me put a couple things on the Donchian channel. Yeah, we're way out of the Donchian trading channel. Not to say it can't continue, but it would be very unusual for it just to stay up here and not come back into the Donchian channel, much like it did here. So let's play that one by ear. But let's take a look at the hot grain markets, wheat, corn, and soybeans really quickly. You can see it all plus 100 or plus 90, meaning a strong upward trend rather. And you can see, boom, look at this. It's like a huge move up. This is the wheat. And you can see we made new highs today. Going to the soybeans, or corn rather. Corn, you've probably read about this. Now, we've never had, there's something really, really serious here, because we've never really had a crop failure here in the United States for a long, long time. And as corn goes into 70% of all the food that's produced here in the States, one way or another, whether it's corn fructose or corn filler, whatever it might be. But this is a very strong up move. And you can see it's just boom, 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 boom. And the weather is not cooperating. It's still incredibly hot, and there's no rain forecast that we can see. And I think that's something to be very, very careful about. This is a weather market more than anything else. But one thing that is concerning me, and I'll share this with you, and it's right here. And this is a negative divergence. We've made new highs, yet the momentum's turned down, and that's something to be a little bit concerned about. But you don't stand in front of a trade. You don't go short based on that. It's like it's like standing in front of a freight train that's coming right at you. So the best thing to suggest is maybe if you're in this market, maybe take some partial profits and put stops on the rest of your position. You can put the stops right where this market is right here. This is where the PSAR is. And that would be right around the 745 level, somewhere around there. So let's go to our next market. Let's clear the screen quickly and go to our next market, because I want to cover some of the bank stocks as well. And the next market we're looking at is going to be the soybean market. This is, again, incredibly important crop for the U.S. It hasn't gone quite so badly as corn, but still, this is a big move. These are record prices for beans. I remember when I was in the Board of Trade on the floors, trading there, basically they were trading $4 or $5 a bushel. Now we're at $16 a bushel. So huge move. But the problem is, if you don't have beans to sell, it doesn't make any difference. That's the problem for farmers. If they can't produce the crop, they can't deliver it against their hedges, and they certainly can't deliver it and make advantage of these incredible prices. So let's go to the portfolio and let's see what else we got. JP Morgan Chase, Citigroup, Bank of America, Wells Fargo, ProShares. Let's take a look, first of all, at a stock that really isn't doing well, and that's Bank of America. There's something wrong with this stock. Not sure what it is, but it looks like to me like it's really in trouble. We're currently trading at 749, and doesn't this look to this looks to me like it's rolling over to the downside, which is incredible. Is you had the move up here, obviously to $10 right here. We've come back down. We're sort of rolling over to the downside. We closed down here. This is going to be potentially, now the thing to do is watch Friday's close, tomorrow's close. We could close at a 6 weeks low in this stock, which is not a positive sign in my book. So I think potentially we could see this market go from where we are, right, let's say here, this level here, toward that, right, let's say right here in this level here. I think we flip that down to the downside, which takes you right down to the lows that we saw back in late May. So let's see how that plays out. But this market does not look good to me. So that would be a definite, let's just put a little thing there, wrong. Don't like this market. Let's see what happens. All of our trade triangles are negative. And let's go to our next market. Let's clear the screen and go to our next market. And that's going to be Wells Fargo. On the other side of that coin is Wells Fargo. Wells Fargo actually looks good in comparison. So one strategy one could use is to buy Wells Fargo and short Bank of America. Now how that would work, you would take the same amount of money and you'd buy the number of shares you can buy. Let's say it's $10,000 or $50,000, whatever the number is you want to trade. Divide that in two and then buy an equal amount of shares for the amount of money. So if you have obviously a $7 share like Bank of America, you're going to buy a lot more shares than you are of a $34 stock. It's about 5 times more the shares. So just do the math. It's pretty simple. But long Wells Fargo, well-run bank. Short Bank of America, really a crappy bank. So that's pretty much the report for today. But before I go, be sure to give us a call. Here it is, one-on-one Market Club coaching. Where else can you get this kind of coaching and help? Find out if it's right for you. Give us a free call at 877-219-1482. It's a free consultation, a free call. You've got nothing to lose and everything to gain. So, hey, this is Adam Hewison for Market Club, wishing everybody a good trading day. And we'll see you tomorrow. And watch those closes on the equity markets today. Could be really, really big.